All right, guys, welcome to the channel. If you're new here, I like to go over fundamentals. Fundamentals give you a deep, in-depth look as to what's actually happening in all of these different assets that you guys are looking to trade, whether it's cryptos, whether it's Forex, or whether it's stocks. Using fundamentals and understanding why these markets are moving are extremely important. And that's a picture that technicals have a hard time painting, and that's exactly what we're gonna go over today. So I talk about fundamentals, and I've been talking about fundamentals for about 5 or 6 years now, but one thing I haven't done is basically say, hey, why fundamentals are so important in like a bulleted format, and that's what we're about to do. So if you guys enjoy this content, if you like it, okay, like the video for your boy. I very much appreciate it. All right, but give it some time. All right, we're gonna see if you like it. Maybe by number 2 or number 3, all right, you might be like, okay, this is a good video. Like it at that point. All right, so the number one reason why traders should use fundamentals in their trading, all right, we know that most retail traders, pretty much 95% of all retail traders, only use technicals. They're purely technicals, especially Forex traders. Forex traders, all they do is plop open the chart and start surfing around, looking at technicals, looking for patterns. They have on a million indicators usually. And if they don't, they're like, I trade naked. I just use price action and I'm just using, you know, the candlestick patterns and things of that sort. I don't have anything on my chart. Okay, you're still doing just simply technical analysis. And technical analysis gives you nothing but price. Okay, the number one reason why you should be using fundamentals is because, well, the best traders in the world, they use fundamentals. And there's one Forex money manager that all Forex traders know about. They put him on such a high pedestal, and that's George Soros. And now he broke the Bank of England, right? And we're going to be doing a video on exactly what played out in that trade and how he made money in that trade and what was the catalyst that he saw, what was the opportunity he saw. And guess what, guys? It wasn't technicals. So all the technical traders that put George Soros on a pedestal, that put Paul Tudor Jones on a pedestal, guys, the best investors in the world are using fundamentals. George Soros used fundamentals to understand why there was an opportunity to break the Bank of England, right? And if we look at the top 4 performing hedge funds for 2020, all right, macro hedge funds, they all use fundamentals, and I'm going to post each one of their links to their website down below. Now, if you know anything about money management funds, they don't like to disclose too much, but you get a gist through their summarization on how they trade and what they do. And guys, they're not simply just managing billions of dollars looking for trend line breaks and candlestick patterns, okay? So the best traders in the world, okay, are using fundamental analysis, and that's because fundamentals give us value. And that's number 2, okay? Fundamental analysis gives you value. Technical analysis lets you know what the price of the market is, but fundamentals give you value, and without understanding or without you trying to rationalize what the value of any particular asset is, then guess what, guys? You will never truly understand where you need to be taking the market. For example, I took a picture here of the Euro USD. Okay, so right now we see the price of the Euro. So today markets were trading somewhere around the $1.17s, $1.17 mids, all right? So we see the price, but where's value? Okay, now we're trying to look forward into the future to try to understand where we think this euro could go, but how do we determine that simply just based off of the technicals here? You could say a couple of things. You could say, okay, well, it looks like markets are overbought, okay? So maybe you feel like value is somewhere over here, right? Or you could say, oh, well, actually, Cleveland, you know, if you zoom out a little bit more, I know you're on a weekly, but if we go back even further in the past, you'll be able to see that there's this huge structure up here at these highs. And so we should get a bounce here, okay? And we should retest the 124s and break even higher, Cleveland. Come on, man. You need to be using past structure. Hey, look, I got a weekly here, okay? We're pretty far out. I can show you guys what this actually looks like. We can zoom out even more. Here's that massive sell side that we saw happen back in 2014. I don't know if you guys were trading back then, but I was, and I saw this move, and we made a tremendous amount of money on this move way back in the day, before Forex was the most popular thing in the world. Okay, there was a reason why markets sold off so dramatically. Do you know why? And it wasn't because of the technicals, okay? So here's the deal. I want to show you guys a little bit of something else actually before we digress. There's something else I want to discuss for you guys on this topic, value. Why value is so important in trading, okay? Think about it. All right. Many people say, well, Cleveland, fundamental analysis is hard. It's hard to understand what's happening fundamentally. That's why I like the technicals, because it's simple and all I have to do is look at the chart. Well, yes. What's harder, becoming a doctor or working at McDonald's? At McDonald's, all you have to do is follow the checklist they give you. Being a doctor, yeah, you got to be a little creative. Okay. The things change. The landscapes change. No one patient is the same. That's like trading. No trade is the same. Many technical guys may know that in some capacity, but they try to oversimplify it by saying, hey, here's a pattern. I trade that pattern the exact same way every single time. Boom. Now, again, technicals are extremely important in that aspect. There is a world where, hey, patterns are important because patterns can represent certain types or certain structures in markets. I'm not saying not use technicals at all. That's not what I'm saying at all. We use technicals every single day. I'm just saying that you need to include fundamental analysis because it empowers you from a technical perspective. Here's why. All right, so let's say that we see markets trading all over the place. All right, here, let me turn this cursor over. All right, so we got markets trading to the highs, blah, blah, blah. Okay, so we have the price of the market here. Okay, now again, where is value? And why is value important? This is the reason why value is important in trading. Let's say the value of this asset is somewhere down here. How do we get to that understanding? Well, in the stock market world, in the finance world, there's three types of ways to value a company. Okay, discounted cash flow, the book value, and the value that the stock market gives that particular asset, okay? So if we see prices are here and based on some model, some process that we went through to evaluate this company, we saw that the value of the company was actually over here. Let's say it was $100 and let's say the price of the asset, the actual market was trading it at 150. Well, then guess what? Now we have to ask ourselves, hey, there is an opportunity here. There is an opportunity where we could potentially see these two price areas, the value and price converge, and that's what you're looking for. Anytime you see prices out of alignment of value, you have a trading opportunity, okay? That's just the way anything works. Let's say that somebody sells you a painting for $100, come to find out the painting's worth $100,000. Guess what that is? They priced the painting incorrectly. Why? Because they're dumb money. Dumb money doesn't know how to value something the right way. Okay, this is why I'm here in Atlanta right now, and guess what's happening? All this gentrification is happening. People are buying up all these older homes, and guess what they're doing? They're going to older people or people that aren't intellectually inclined, and they're giving them prices for their homes that are way out of line or way out of whack or way out of sync with what the actual value is. Because guess what? Dumb money just looks at the money. They just look at the price, and if that feels good to them, okay, then guess what they're gonna do? They're gonna sell, they're gonna buy, they're gonna do whatever it means for them. But smart money understands value, all right? And when you understand value, you realize that the opportunity might be bigger, or the opportunity is a little bit more obvious as it relates to where you need to be taking profit or where you need to be as it relates to where this asset needs to be priced, okay? Without fundamentals, without having some idea as it relates to the value of an asset, then simply put, you're trading blind, right? All that's happening at that point is you simply are guessing now, okay? You're guessing where should you be, okay? Is value here at this high, okay? Is value down here, maybe at the lows within the consolidation? Where is value? You don't really know. You don't really know because you don't understand why the market is priced at where it's at 150, what drove it there, okay? So the catalyst that drove markets, what made this move happen here? What happens if that move can't be substantiated, okay? What happens if that move was driven mostly emotionally by maybe retail or institutional investors getting very greedy? Okay, then guess what? If you don't understand that, then you may not understand the propensity at which this thing could fall. So value is, again, number two, the most important reason why technical traders need to be using fundamental analysis. Fundamentals give you the value of the asset. And the third reason why technical traders need to be using fundamentals kind of aligns a little bit with here determining value, which is maximizing profits. Okay, without using fundamentals, it's a lot harder to maximize profits than you would assume. All right, and this is, by the way, something we go over in detail inside of our fundamental bootcamp. Go to the link in the bio, fill out the questionnaire, and one of our senior traders will get back to you. All right, so number three, again, extremely important, maximizing profits. Think about it. All right, let's head back over to the charts. All right, let's go to back to TradingView. And let's say here, again, let's keep using the Euro USD here as an example, okay? So right now, Euro U trading at, again, as I mentioned earlier, 17.24, 117.24. Okay, now, where is this thing gonna go? Well, let's kind of give some hypotheticals real quick, okay? Right now, we know the US dollar is increasing in value. We know why that's happening, okay? It is a fundamental reason, all right? But at the end of the day, let's say something crazy happened, like there was a bomb that just went off in Iraq, Who bombed them? It was no one other than Korea. What's about to happen? All right, you're gonna have global risk and global markets get very, very much in a frenzy. Okay, you might have China come in to help out North Korea. Okay, you might have Russia come in and help out Iraq. You know, there's a lot going on as it relates to interdependencies amongst countries. Okay, you're gonna have a lot of people get involved into that. So you're gonna have risk increase so dramatically that market participants are going to do what? Put their money in more safe assets. All right, war is not good under any terms and any circumstances for the markets. Okay, so when you have that happen, guess what's going to happen to this US dollar? Here we have our dollar index, and again, you guys can see that the dollar right now is kind of poking up a little bit. Guys, this thing is going to actually shoot to the moon. It's going to shoot to the moon. That's a huge, huge deal. War, something of that capacity, right? So if we pull back over and we go to the Euro USD, how much is that going to affect our Euro USD? When should we start to sell this asset? And when should we get out of that trade? Well, I'll tell you this, if something that huge happens, guys, you know what's going to happen? We're going to revisit the lows here on the Euro USD unequivocally, obviously 100% so. That's what's going to happen. All right, we're going to revisit these lows. And who would have thought that 1,200 pips is our price target? If you're looking at things from a technical perspective, maybe you wouldn't be looking at these lows here. From a technical perspective, usually you're on a lower time frame, right? So you're on a lower time frame. Let's head to the daily, okay? And you have no idea what's about to happen. You have no idea that war is about to cause this market to absolutely turn around. And we know this is the case. We know this is how markets work. Time has proven that markets react massively to geopolitical and world events like this. Look at what happened during coronavirus. Why do you guys think that the US dollar, here we go, here's the US dollar, look at what happened to the US dollar during COVID. What do you guys see here? Okay, a massive, massive increase in the price of this currency. Massive, by the way. Okay, when I say massive, I mean massive. Look at it relationally to the past. Okay, we can scroll back as far as you want. This is COVID and this is everything else. And there's that 2014 move that we were talking about. All right, so again, world events have a massive, massive impact on all of these different currencies. All right, so that's what would happen. But again, without fundamentals, it would be hard for you to understand the target at which you need to be executing, the target at which you need to be selling markets down to. Okay, the best that you could come up with as a technical trader is to say, hey, we're going to sell this back down to what? The next level of support or resistance. Okay, and so what would that be for you? Well, if you're a technical person, let's head back to the weekly. Again, most technical traders are not on weeklies. Most retail traders are nowhere near weeklies. They're usually trading on these lower day trading time frames, again, which is another reason why they fail so dramatically. Swing trading is by far the more profitable way to trade, but a lot of people don't want to hear that. Why? Because of course, who doesn't want to make quick money? All right, that's the quick get rich quick scheme of the world. Quick money, 1 minute, 5 minute, 10 minute, 15 minute time frames. Hey guys, you can make money real fast. Of course, that sounds so good. That's so sexy to say, but is that really helpful? Is that a methodology you should adopt just because it looks so sexy? All right. A lot of the traders in our bootcamp are purely swing trading. Some maybe swing trading intermittently between swing trading and day trading, but they're holding positions a lot longer and they're getting much better results than your run-of-the-mill Forex trader who's just trying to flip his trading account using some bullshit technical pattern, so on and so forth, right? So again, you may say, okay, I'm going to take markets back down here to this support level, right? You may even say, hey, I may take markets back down to this support level. And of course, the fundamental trader is going to be looking at those levels, but we know with something as massive as an event, as we just spoke about, some type of war that goes on, then yes, we're not going to be worrying about this level at all. Okay, at all. We can use another pair because right now this Euro USD is just shrinking sell side. Let's talk about the pound. Okay, the pound is, again, it ran to the upside because of a fundamental reason. Okay, we passed Brexit. When did Brexit get passed? All right, when did they sign off on that paperwork? Okay, well then notice when the pound started to increase in value. All right, so anyway, if something again negative happens geopolitically, more than likely people will be taking funds out of the pound and putting them into our safe haven assets, like the US dollar, like the Swiss franc, and like the Japanese yen. We can talk about more of those in a second or later on the channel. Okay, make sure you guys are subscribed. We talk about safe haven currencies and that play from a fundamental standpoint all the time. But again, same thing. Where would you start to take that market down to? Okay, so price targets become a lot easier to understand and reconcile when you use fundamentals. That's why maximizing profits is number 3. It gives you that much more data. Okay, use fundamentals to maximize profits. It works much, much better than just simply using technicals, price action, things of that sort. So the fourth reason is a little bit more esoteric. It's not really about the markets. It's just about being a savvy investor. It's about being a savvy trader. You become smart money. All right. When you understand fundamentally what's happening, that means you can go out in the world, right, and have conversations with people about the economics. You can have conversations with people about the numbers, about why the economy is doing what it's doing. Because again, 99% of the time you see any price action in these markets that's substantial is because something's going on fundamentally with the assets. Okay, so you'll be able to go out, you'll be able to have conversations, intellectual conversations. Higher level people, all right, are using fundamentals. Here's a conversation I had with Brent Johnson about if he uses technical analysis or fundamental analysis. Brent manages an 8-figure fund, okay, tens and tens of millions of dollars in his portfolio. This is what he said about fundamental analysis versus technical.
So when I look at fundamentals, but on a big, like on a country basis, right, or the fundamentals on a state basis or a country basis. So I do think like the fundamental drivers are probably the majority of my opinion.
Okay,
I
cool.
certainly don't just go with it. Like the dollar is a perfect example.
Yeah.
Like I have a very fundamental view on why the dollar is going higher, and I have a number of fundamental catalysts why I think it's going higher.
Yep.
Sometimes the charts line up with that, sometimes it doesn't. But if I had to choose between the two, I would go with the fundamentals.
And I'm not going to stop there. Here's Michael Pinto. I asked Michael Pinto, Pinto Portfolio. Michael's been in the game such a long time. All right, he manages, again, tens and tens of millions of dollars. Okay, trading just like you and me. All right, this is what he had to say about fundamentals and technical. You may know a lot of retail guys love the technical side of things.
Yeah, I know. Something that never really worked for me. I mean, on a broader sense, on a very broad sense, there are some things you can glean from technical analysis because that's the history of a stock.
Right.
I mean, is it in a downtrend? Is it making lower highs and lower lows? I mean,
right.
I like that trend. I like that aspect of it.
Yeah.
But I mean, I'm not doing candlesticks. I'm not doing, all this kind of stochastic stuff.
Yeah.
I just want to know this. What is the fundamental cycle that the economy is in? And if I can figure that out on a broad sense, then for the next, 1 to 3 months, I think I can get your money positioned in the appropriate place.
So you guys don't have to just simply take my word for it. Have I worked in these organizations? Are these people within my network? Yes, they are. But maybe you need more data. Maybe you need more things to back it up. You need many things to prove that, hey, this candlestick pattern works out, okay? All you needed was some maniac on Instagram or YouTube to tell you, hey, that's what you should be doing, and then you followed suit, okay? But guess what? I want you guys to do this on a more professional level, and you'll soon realize that professional traders, professional retail traders have some type of fundamentals in their strategy, all right? And last but not least, one of the main reasons I adopted using a fundamental strategy way back in the day is because it helped with my confidence. It lessened the amount of indecision I had. When I knew that I was looking for a particular instance, a particular catalyst in markets, okay? There are 15 different catalysts that can drive currency markets. 95% of all currency volatility is driven by 15 different catalysts, okay? And then you will soon realize that most professional traders are using fundamentals in this exact same capacity, something that you have access to and something that you can start to do immediately. All right, so guys, like the video for your boy. I appreciate it. We'll be back very soon, probably tomorrow, with some more content on fundamentals, probably going deeper into the charts and doing some actual fundamental research. Make sure you guys maybe turn your post notifications on when that's out because some of these trades can move fast and I don't want you to miss anything. I'll talk to you guys soon. Peace out.